Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. Every single day that the market's open, we're going to get on here live at 11 o'clock Eastern, share a couple of things about the market, and every single day we're going to trade, or we're not going to trade, we're going to share our number one trade of the day. Today we got 4 topics. Now, because we've been sharing a trade every single day, we're accumulating a lot of trades. So the first thing we want to do is let's go over the portfolio. Okay, we're going to do a portfolio review. Ethereum is starting to move. We have a ton of Ethereum catalysts that are going to push this coin higher. The third topic is going to be, let's call it a little mini class. We're going to talk about earnings advantage. Earnings comes around 4 times a year. It's like Groundhog Day. Rinse and repeat. And then fourth, our trade of the day. Some of you will recognize this name in SYM. It's a name that we traded last earnings season, and it's presenting once again. So let's go over to the PowerPoint. Let's get going. So the first thing that we're going to do, guys, is let's go over that portfolio because we started sharing trades February 23rd. Okay, right down here. And we've been sharing every single day. Okay, overall, we've shared 22 trades. Now, out of those 22 trades, 7 of them we've been able to close. Okay, so we got closed, 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 closed. And then out of those 7, we still have 15 that are open. Now, it's important for us to clean up the portfolio as things are moving. So if we go over them, CCL we shared yesterday, patience, HPP, that expires at the end of the year. We've got nothing but time. Lemonade, I'm going to go over that trade because Lemonade is an earnings trade that we shared last week. And today we're going to go over a little earnings class, but we're also going to share our next great earnings trade. Lemonade still hold, lift, patience. BHP, this is a great trade. Copper is going higher. We got in BHP because it's correlated to copper. Stay long copper. Be patient. OMI, patience. Hal Caesar is doing great. Uranium trade, CCJ, we're not going to do anything. Katos. Katos is our trade on combat drones. Who wants to be long combat drones the next 10 years? Katos is your name. Katos was moving yesterday a ton. It pulled back a little bit. Let's hold on to Katos. I was thinking about taking off some of those calls, but no, let's be patient. We're on the right side of combat drones. AMN, hold cart. We got in at 30. I think that sucker's going to 100. CCJ, FLR, patience. Here are our 7 closed trades. The 7 closed trades are performing great. An average return of about 99% on those closed trades. So the overall message, make sure you're paying attention at 11 o'clock Eastern live every day as we share that trade of the day. Let's go on to, I'll come back to Lemonade. So let's talk about Ethereum because Ethereum is going higher. The big difference of how we're looking at coins versus many others that I see looking at coins, we're not looking at technical analysis at all. We want real reasons of why these coins will trade higher. So flows into Bitcoin ETF, obviously this is a monster one. We have the Bitcoin halving. That's going to pull Ethereum higher as well. What we were focused on is the Denkin upgrade. The benefit of the Denkin upgrade is Ethereum is getting a lot more efficient. The blockchain is now 10 times faster. We have regulatory approval of BTC, ETF. Ripple's recent stablecoin announcement, working across chain with ETH. ETH Bitcoin has been right around its lowest level since ETH implemented the burn mechanism. And then also there's high odds for an ETH ETF. All reasons why we believe ETH trades higher. Something else to watch. This is the grayscale ETHE premium discount to NAV. This is showing how ETHE is actually trading off the coin, trading off Ethereum. So it used to be about a 45% discount. As Bitcoin got approved, that discount narrowed. It's going out a little bit, but I do believe this is a sign that ETH ETF is going to be the next one that's approved. Another great reason for Ethereum to trade much higher. Let me take you to a little earnings class. Earnings. Earnings comes around 4 times a year. Earnings is a rinse and repeat type of trade. I like to call it Groundhog Day because we know that earnings is just around the corner. But we look at earnings a very unique way. 2 examples in front of you, 2 stocks. One stock is ABC. The other stock is MIT, Masters in Trading stock. ABC, in this example, MIT. After an earnings release, this is how much these stocks move. ABC moves 10% every single time. Whenever it releases earnings, guys, it moves 10%. I don't know why, it just does. MIT, on the other hand, moves 20% every single time it releases earnings. Now, why? More uncertainty about MIT. Perhaps fewer analysts follow MIT. Maybe there are less market makers that follow MIT, so it's more volatile. Well, the options market has to price the options based on how much a name can move after earnings. So ABC stock, let's value that at 10% because it moves 10% every time. MIT, we'll value at 20%. Now, but remember, these values are only for earnings, okay? It's only for one day. So if MIT is 30 days until expiration, 30 days, right? One day, we're going to expect 20% of movement. But those other 29 days, how much will the stock move? And that's where it comes into options valuation. This is a stock called SIM, SYM. Now, SIM is a name that we've traded before. But SIM, its moves after its last earnings releases are right here. Okay, so when SIM releases earnings, that day, if it releases in the morning or after the close, it averages about, 23% of movement, okay? This name can really move. It moves more like MIT than ABC. So if there's about 20% of movement for SYM, the options market needs to reflect that. So SYM, 20% of movement. Well, the way to figure it out is right here, 10.265. 10.2 is approximately 22.57% of 45.46. But remember, SIM moves 20% after its earnings release. Okay? Let's agree to that. Maybe even a little bit more. But conservatively, SYM averages 20% of movement in its last 5 earnings releases. So now, SIM, okay, there's 38 days until expiration. Okay, right? 38 days until expiration. The market is pricing in 22.57%. And the market's pricing that in over 38 days. Now, I believe that one day is 20%. So now, what about the other 37 days? That's where it's crazy because the other 37 days are only pricing in about 2.57%. That doesn't make sense. That is cuckoo. Okay? That is not enough at all, which makes these options extremely, extremely inexpensive. So the trade that we would do most often is a straddle. But because the straddle is pretty expensive, I don't think we should do the straddle. Instead, here's the straddle. It would be buying 540 and buying 480. It's just too expensive. That's like $10. We don't want to do that. Instead, here's what I like. Let's do the strangle, okay? Now the strangle, it's just like a straddle, but instead of buying the call and the put at the money, let's get the prices down and let's do the 57 halves. We're buying these for $1.60. And then let's also buy the 37 halves for $1.70. Okay? So I'll write it up here. 57 halves. We're buying for $1.60. Calls. And then also the puts that we're going to do are these 37 and a half puts. Puts, 37 and a half. And we can do those for, come on. $1.65 bid here. $1.65. Your risk on this trade is the total of these two, right? So $325 of risk. $325 per contract. You can look at that position like your long stock from 57 and your short stock from 37 and a half. We want to see lots of movement. That's why we like this trade. One last thing. April 3rd, we shared an earnings trade in Lemonade. And that trade was the 16 calls and the 16 puts. Right now, the 16 calls are trading about 260. The 16 puts, we're down 80 cents, okay? So look at it. We're down 80 cents, but you're up $1.05 here. So we're up 25 cents on the trade. Patience, though. Let me hop on live. What we want to do with these earnings trades, hold. Hold, hold, hold. SYM is really priced inexpensive, but there's 38 days to go until expiration. Now, the earnings is expected, I think it's expected May 3rd or May 6th. But with this trade, you're going to get in and you have $365 of risk per strangle. We want to hold that until expiration or until Johnny gets on up here and says, it's time to take a really big fat profit. We get on here every single day. I share my favorite trade of the day. I like to look at the market from a unique perspective, a different perspective. We like to say the creative trader wins. Trade smart. I'll see you live tomorrow, 11 o'clock Eastern time.